Good afternoon, traders. Are you guys ready for another stock market movers? It is another one of those days where it feels like we got a mixed bag out there. We'll definitely talk about the catalysts that are going on in the market today. It's tough markets to trade. Definitely, we went down right out the gates there, right back towards that 393 as we were getting a little bit of a bounce in the pre-market. Will we get back towards Friday's close? It looked like we were closing pretty strong. Came back down in, of course, the after night hours. And now we're looking to come back. Can we get back there towards the 396? We'll take a look at the SPY today. We got some headlines. Disney, of course, in the headlines. Goldman Sachs. We'll take a look also, of course, at JM Smuckers. We'll take a look at Merck getting some lift even after an acquisition. That's showing a little bit of strength there. Is it the end of this recent kind of growth little push for a second? Value coming back into focus. We'll take a look at that. And of course, Black Friday holiday shopping on the forefront. We'll take a look at Best Buy, Nordstrom, Dick's Sporting Goods, Dollar Tree. Which one will get the lift? We'll take a look and see what we see in the markets today. And of course, we got our guest, of course, JD Hatfield, founder and CEO and portfolio manager at Infrastructure Capital Advisors. Let's get right into stock market movers. I'm your host, Money Mitch. Let's see what we got in today. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, let's go ahead. Let's take a look into this market. And I do see you guys in the chat talking about something that is interesting me. So stay tuned, team. We got a lot to talk about on today's action. But let's start off with, of course, the SPY and see what we're seeing in the market today. Looks like we're battling right now. Can we get back towards the 396? Are we going to go back to the 390s? Those are kind of the levels that I'll be watching. Of course, we were looking for last week to get through the 400. We got just slightly through it and then started to pull back. It looks like the 9 EMA is holding really well right now as support. You can tell it from Thursday's price action, 9 EMA around the 391.17. Right now, I got that 9 EMA around 392.58. Today, 392.66 as the low. Looks like we're holding in right now in the momentum, but this could always flip. And of course, we're just going to keep watch to see what happens. Of course, I don't expect to hear much Fed talk this week. So I was thinking, are we going to get a Thanksgiving kind of rally? Maybe even before Santa Claus. Why not a Thanksgiving rally? Well, we'll have to wait and see. Today, definitely still in the works here, as we did push up here on the 15 minutes just a little while ago towards that 394.75, got towards 394.68. Can we get back above the 395 on the day? Then start trending up on the 15 minutes. We'll wait and see. Of course, there's a lot to talk about. A lot has happened, of course, this week. I think this more long kind of a week that we can keep watch on some of the retailers. I think those will be on our eyes, of course, with earning stocks coming up like Best Buy, Nordstrom, Dick's Sporting Goods. We definitely need to keep these on watch. And it's been a mixed bag. Some retailers have been talking about, of course, the recession that could be coming. Some others like Walmart showing us that maybe some of the lower cost names are the ones that we want to be having, like also Ross stores last week reported good earnings and got some lift. So we'll keep a watch on these value names that are out there. Let's start with our first conversation on the day. Of course, this is going to be on Disney. So let's pull up Disney's chart and see how it's trading on the day. You guys can see it pulled back significantly. I was watching the 1 hour chart to see if it would hold the 99 level, and it quickly broke through there. Now we're back into somewhat of the gap zone. Let's talk about what really went on here in Disney today. Well, Disney replacing, of course, its CEO, Bob Chapek, with Bob Iger. Of course, Iger had worked for Disney 15 years and said that he wouldn't return to the job. So interesting to see him returning that quickly here. And of course, there was some memos put out that maybe the mentions from Bob about cost cutting led to some of the internal push back against Chapek. So looks like Iger taking control again. And a lot of this, I think, is just on the eyes here that the board feels that, of course, Iger has a better outlook of the business and what he wants versus what Chapek wants. One thing I heard really quickly when this started even first happening, right, when Chapek took control, was that they had two very conflicting thoughts on what Disney should be pushing on. And I think that here is a conversation where it seems like the board was not in agreement of what Chapek was doing and wanted to go back to Iger. Of course, a lot of talk out there that Chapek was caught by surprise on this mention. So we'll just have to wait and see how Disney responds after this. But I do think that, of course, the spike was a little bit over exuberance to the upside. We'll see if it's able to catch the bounce and come back up. Of course, last week it looked like Disney held on to the 90 area really well and started making its way back. Big area will always be when it gets back above the 100. We'll see if it can start making its way. Walt Disney. All right, getting out of the Disney story in a few minutes. We'll get to our interview, but let's keep going. Let's take a look at some oil stocks as Goldman Sachs lowering its oil price forecast by $10 to $100 a barrel in the fourth quarter of 2022, citing COVID concerns in China and lack of clarity from the group of 7 nations plan to cap Russian oil prices. And remember, in just 2 weeks, we'll get the EU embargo taking effect on crude. G7 price caps. We'll see how that really affects these stocks. But it seems to me like Exxon hasn't been able to really crack. A lot of this could be, of course, what we talked about on pre-market prep, that it could be the low PEs still being attractive for a company like Exxon. And even today, coming down here right out the gates, but again, recovering here towards the close, just like it did on Friday. And so this is a little bit worrisome if you're kind of more in the bear in this territory as it keeps coming back. We're going to look to see if it gets that kind of push. Looks like the buy the dippers took control again and really started pushing after that 108. But my biggest thing is just also keeping an eye on crude, right? Because crude keeps cracking down. I see it below the 80 mark and the crackdown even towards 75 here today at around 11. So if that keeps cracking, I think eventually you might see a little turnaround, but these stocks have stayed strong. A lot of this on that low PE outlook, Oxy even coming back there. So we'll see what happens with these stocks as they bounce back. Will they ever break? And we'll also ask our question probably coming up to see what Jay thinks about the energy outlook there. But definitely these oil stocks don't want to turn around right now. We'll see what happens with these oil stocks. Let's take a look at what else is making moves. Let's get into what was hot and what was not, and then we'll get into our interview coming up. All right, so we take a look at today. What is in the green, right? Well, basic materials are kind of leading the way to the upside, and they're overall in the red, but from the open, up about 0.64%. Let's take a look at what is moving up there. Looks like steel, some steel stocks getting a little bit of a lift today. Nucor with a nice little push above the 146.10 area. I've been waiting for us to get above that level as I have a resistance drawn in there. So now Nucor starting to get the trend back towards the upside. Of course, this one had come back down fast. So with that one, we'll keep watch of Steel Dynamics as this one has remained strong and has gone through the 52-week high. Now continuing to push. We'll see if this one can continue holding the 100 on pullbacks. Steel Dynamics with a nice lift into the 103s today. Of course, X, U.S. Steel, now starting to get back. Will it start getting its way back towards 26? Has the 200-day right above it around 24.79. So that could act as some resistance as it has in the past on Tuesday. Let's see if it gets back through 25, start making its way to 26. And of course, another one you guys can watch in steel is Cleveland Cliff. This one's off the bottom, so kind of more of the laggard style play. Leader in NUE really leading the way there. We'll see if it can continue making moves to the upside. One catching a little bit of a bounce back is ALB. I definitely keep this one on watch. I do like this company long term, and it's had a nice little pullback on the weeklies. So I will look to see if it can get back above the 290s, back into the 300 handle. We'll keep this one on watch. ALB, of course, this is kind of more of your specialty chemical play. You guys can also be looking at a SL. I'm getting it wrong right now. SQM. Sorry about that, team. I just wanted to make sure I give you guys the right ticker there. This is another one that I'm thinking about here that has had a nice little pullback in the chemical games. Look at the weekly, nice little support underneath it now around the 90s. We'll keep this one on watch. SQM, and this is a Chile play. And what I like about this one too is that it has some exposures other than just lithium. So keep this one on your radar. Sorry about the struggle there, but let's keep going. Coal stocks have been really strong lately, and you guys know how I've been talking about it. Santa Claus is coming to town, and he's bringing some coal this year. At least it looks like. BTU, let's take a look at BTU. Will this start getting the lift and making the move towards 30 as it's pulled back now towards 27 multiple times, 3 days in a row where we've had some wicks down there. So I'm going to use those as kind of support, start looking to see if this is going to really start getting a nice little uptrend. BTU starting to push back. We'll see if it can get that lift and keep pushing out. Another coal stock to keep on watch. Of course, you guys know how I like some of these. AMRs, another one that I like. Look for that one to finally get through the daily pullback and then push on up through 170. We'll see what happens on that one. Coal stocks have been strong lately, and we'll see if Santa can bring a little bit more coal this year. All right, let's keep going. We'll take a look at what was down on the day. Down on the day, you got consumer cyclical down about 1.11% from the open. What is getting hit here the hardest is auto manufacturers. And take a look at this daily. This is kind of a sector outlook, of course, an industry outlook from the indexes that I use on TC. But nice little down move there, break through the bearish pattern there on auto manufacturers. So we got to be careful. These do not look good. Take a look at Tesla, right? Tesla down there to 169.97. And I've been thinking about looking at, of course, I've been calling out this level for a while, the split level from, of course, 2020, August 31st. It was a 5-for-1. The high that day was actually 167.49. And it looks like we're getting really close to that now. We'll see if it gets into the 160s. As we're seeing Tesla really just fall off the daily chart. And now it doesn't look good. Even on the monthlies, it was holding for a while. Now you got to start looking to see where the next kind of monthly support can really hold there. As you look, there's some resistance around the 167. If that doesn't hold, we could be back down there towards the 130s on Tesla. Doesn't look good there. Ford and GM, another ones that have pulled back here. We'll see if they're able to catch the bounce. But, of course, falling into next year, is it really going to be the EV year? I think it might be the infrastructure behind EV, but I don't know too much about these EVs and how good they're going to be able to sell in a recessionary environment and high interest rates. Of course, some people will still be needing cars, but how much will they really be needing them? We'll have to see and wait. Lucid down back towards $10. This has been one that I've been calling towards the 10. It's almost there. So definitely going to get to the point where I'll stop being so bearish on Tesla. Once it breaks to the 10, I can stop on that call there. We'll see what happens on Lucid. It's been definitely a dragging stock. NIO is another thing that kind of shows me too, the China names, China EVs names, not wanting to hold there. It's at $10 and could let go. We'll see what happens there on NIO. All right, gambling stocks, of course, also not doing too good. Resorts and casinos. You guys heard about the lockdowns right back in there. So that's what I was calling out on Wynn. I felt that Wynn was riding that wave way too high about Macau being reopened. And there you guys see it. It's right back down. So we'll see if this can continue on the downward wave as you're hearing more and more kind of mentions. There was another death of COVID in China. So there's some re-lockdowns being mentioned. We'll see if Wynn falls off the tape. All right, getting out of what was hot and what was not, can get into more stocks, but we're going to go ahead and get into our interview today, catching up with the chat. What's going on out there? Beach Bum, Jim Cruz, MD, Christopher. What's going on out there? Kevin, it's good to see you guys in the chat. If you guys have a question for my guest coming up, definitely throw it up in the chat. This is the one place where you guys get to join in on the party also and ask some questions to some experts. So let's go ahead. Let's get right towards our interview today. All right, let's bring on here JD Hatfield, founder, CEO, and portfolio manager at Infrastructure Capital Advisors. Welcome back on, Jay.
Thanks for having me on, Mitch.
How are we doing today? It seems like it's another tough market. I don't know what's going to be tougher, the pants this week or the market, because of course, we know we need some turkey, but it seems like this market doesn't have the gravy right now. What's going on, Jay?
Well, I think that today we're being impacted by the China COVID shutdown. That's kind of the overhang. And then a little bit of FTX fallout, which I think is hurting the technology stocks. But we've favored Dow stocks all throughout the year. We made that call in December of last year. So if you're in the Dow, you're actually doing fine today. It's up a little bit. Obviously, Disney's leading the way. So we continue to be constructive about the stock market as a whole, more of the value, dividend, low PE stocks. But the reason for that is we see inflation decelerating fairly steadily, if not rapidly, particularly next quarter as we anniversary the energy price shock. We have an erratic and irrational Fed, and they don't recognize we had an energy price shock. That's what really drove inflation to 70s, not really monetary policy, a little bit of bad monetary policy, but mostly energy shock. So we need to go like 1 year out from that, and energy's come down, and we think that inflation will go down because there is a bleed through from headline to core, which almost no one recognizes. So if inflation comes down, interest rates will come down, and the stock market should do well.
It's going to be a tough market right now. One of the things that, of course, a lot of investors are keeping a close eye on, of course, is now that we're starting to see inflation turn around, is this really going to cause a pause or slowing down in the interest rates? It seemed like the Fed last week really just tried to kind of tame the expectations to the upside. Do you feel that this is a good thing that they're doing, trying to keep us in check here? Or are you in the camp that kind of we're starting to really see inflation turn around, and now we can start looking to see the data keep following the numbers?
Well, we think you mentioned expectations. That's the Fed's theory of inflation, but we strongly feel that they completely misinterpreted the data during the 70s. Inflation was driven by loose monetary policy, 8% money supply growth average per year, and two gigantic, with a capital G, energy price shocks. One was 150%, the other was 200. We only had a 70 this first quarter. So they said, oh, well, it's because expectations got out of hand. Everybody was expecting inflation, so we're going to have more inflation, which we totally don't agree with. But that's why, because they do firmly believe that that's an issue, that's why they feel like they need to smash down the market. We call it, there used to be a Fed put, now it's a Fed short. They've like teamed up with hedge funds to try to smash the market down.
Now, if you have that outlook, Jay, where do you see us towards the end of the year? Any outlook on the S&P 500?
Well, we're constructive, but probably range bound. Again, we would be, part of that reason is you might continue to see this rotation you're seeing today, where you go into the financials and kind of there's a few value. Actually, most Dow stocks are doing well. Microsoft's in the Dow, they're up. So kind of this value, dividends, lower multiple rotation might occur. And so it's hard then to say, well, you could make a lot of money if you're in those stocks, but does the S&P really go to highs? Because at the same time, if Apple doesn't participate and Tesla's getting smashed by the Elon Musk situation. So that's where I get more neutralish versus constructive. It's just, I wouldn't be all in on tech stocks like a lot of your younger viewers probably are.
Definitely.
And, try to go a little bit, at least for a short period of time, go kind of like old school, the more of the energy stocks, utilities, even REITs, and not necessarily just go look for the hottest tech stock out there.
Yeah, no, I agree with that. And I feel like even the non-sexy names, you don't have to give an opinion on a specific stock, but like a stock like IBM that hasn't been in headlines for so long has made a big recent move up, like at least like in the last 1 month, about 24%. So it seems to me like value has truly
Right.
come back into play. Cash flows being the focus here, right?
Right.
So is of course you mentioned energy. Another sneaky area that I've been seeing making moves is industrials. How do you feel about these going into, of course, 23?
Yeah, we mentioned IBM. That's actually the only tech stock in our large cap dividend fund because it is low multiple and high dividends. So, when it comes to industrials, they should do well because it's kind of old economy. Just the only caveat is you have to look for their European exposure. If they're overly exposed to Europe, because we do think Europe's going to go into recession, and that's one way that inflation will continue to come down. Is we think the U.S. will be pretty resilient, but Europe will go into recession. In fact, the U.K. is arguably already in recession. So I would just look for that. Be more domestically focused. Defense companies are in the industrial sector too. They're well positioned with the ongoing war. But those stocks are working right now, but on both the defense and industrial side.
Now, it seems, of course, that we've gotten a mixed bag in retail. How do you feel about the Santa Claus trade coming to town this season? Do you feel that we already maybe got it, or should we be looking for it? What do you feel, Jay?
Well, I do think that this, the end of November, people sort of forget, is usually a bit of a slowdown in the market.
Mm-hmm.
You have a hangover from earnings because usually you want to own stocks. Like we'll say this every time you have us on. You want to own stocks while earnings season is going on. So we had that. Now it's over. But you do get this year-end rally where people are, recognizing January we're going to have people putting new money to work. And that usually kicks in kind of mid-December. So there's no reason to believe that won't occur. But on the actual retail side, that's going to be more problematic because you have this push-pull where you have the 65% of people on their own homes who are pretty well off. They're actually benefiting from inflation. 35% are not. Some are trading down. How far they trade down. All these judgments are problematic. Like, do they go to dollar stores or do they go to Walmart or do they trade down at Walmart so Walmart does less well? So we think that it'll be a mixed bag and somewhat problematic. So we're steering away from retail stocks right now.
All right. Now, one area that I saw catch my eyes last week was Bullard comments about interest rates not being in a sufficiently restrictive level. Seems like this is a comment that also is stated multiple times by Fed Chair Jerome Powell. How do you see sufficiently restrictive level, Jay? Do you think that is it 5%? Where do you think that it's going to get to the point where they could see it as being restrictive?
Well, there's a difference between what's the reality and what the Fed believes, because again, we feel like that they're incompetent at making those judgments. So we look at the money supply. So if you want to predict inflation, I would strongly recommend your viewers use a two-factor model: the money supply and oil. So if the Fed had used that, they never would have come up with this transitory theory. And also, by the way, you should look at PPI, not CPI, because PPI leads. So PPI was hitting 10% while Powell and the Fed were putting out their transitory talking points. So they're clearly out to lunch and clueless. So they may take us to 5. That's the real risk in the market. They don't need to, because if you look at those two things, the money supply is down 17%, dollars up 15%. Commodities are crashing. Even more so, the oil is holding up better than other commodities, which is a leading indicator of inflation. And the housing market's rolling over. Housing is 33% of CPI. So if they were competent, which they're not, they would recognize just what Jeremy Siegel has been saying. I'd recommend him. He's a former professor at Wharton, that inflation is clearly rapidly declining. Now, the market doesn't believe the Fed because we're not the only ones. This is the actual consensus. It's not like we're just picking on some random person or organization. This is Wall Street consensus. But you do have this push-pull where the Fed speakers get on. They say these hawkish comments, 7% being very hawkish and irresponsible, I would argue, erratic. But yet the reality is very clear that inflation is coming down. So how do those two factors get resolved? And I don't think the Fed will ever get to 5 because even they will figure out that inflation's dropping.
Yeah, the 5 to 7% seemed a little bit reckless there, especially 7%. I think that was a little
Right.
bit high outlook there. We'll have to
Yeah.
wait and see if we really start seeing it getting higher. Of course, I've heard certain analysts say that maybe we might get it higher than the core PCE inflation level. We'll see what happens there if they can get it higher towards that level. And of course,
Yeah.
when do they actually start seeing that they're having an effect? Because of course, you've had mixed signals there from the Fed saying that some of them are saying that we are having an effect, that they are seeing inflation down, and then some, of course, still in more of that hawkish tone. The last thing I'd like to ask you about is, of course, going into next year, of course, a big outlook is going to be on when does inflation get back towards that 2%? Do you feel that we could get back towards that 2% rather quickly, or do you feel that it's going to take a longer period of time to kind of leak down towards that 2%?
Well, the first critical point is 2% is completely arbitrary and too low.
Yes.
We had a much better economy, better wage growth in the 80s and 90s when inflation was between 3 and 4%. But you don't want 8%, just to be clear. I'm not arguing for high inflation. But moderate inflation is better than low. So the target's completely made up. They just copied it from other central banks who had just made it up. New Zealand made it up in the 70s. So 2% is ridiculous. Whenever the Fed may never figure that out. But we do think we'll get to 2 to 3% by the end of the year, because by then, again, this trickle down effect, even though there's a Fed paper that validates it, there's a 5%, trickle through or bleed through from headline inflation to core, because everybody used energy. Obviously, some businesses use tremendous amounts of energy, like airlines. So that'll get anniversaried in the first and second quarter. So by the end of the year, we should be reporting. I mean, of course, you have to, there's a year over year versus the monthlies, but the monthlies should be very, very attractive by the end of the year. So hopefully the Fed calms down if we're at 2.8 and doesn't keep raising rates, because 2 is a ridiculously low target we never should have adopted.
Last question I have is just kind of more of a perspective for us out there. What kind of, and I'll use and you can use a different terminology if you'd like, but maybe like a baseball terminology. What inning do you feel that we're in the bear market here?
I mean, I think that we're, 7, 8, 9. I think we've, found a low. And, it's not time to go all in and just buy, Bitcoin, obviously not Bitcoin, but the riskiest stocks in the market. But it's time to start picking away, dollar cost averaging in, recognizing that the Fed is going to destabilize the market periodically, the Fed short, as we call it. So we would be, we're cautiously optimistic and think that if our view is realized that inflation steadily coming down, the market could be quite attractive next year. Jeremy Siegel is saying something similar, and that's kind of his specialty, is the stock market. I mean, he's also, the reason I'd recommend listening to him is he's a PhD in monetary economics, where the Fed, they're all Keynesians. In fact, Powell is just an attorney, so he isn't trained. But Jeremy Siegel is good to listen to because he's PhD in monetary economics and he studies the stock market. So he's pretty bullish next year. I'm not really, we do our own work, but I'm just kind of referring to him because he's more of a public figure.
Definitely. I've seen Siegel all the time, and I definitely catch all his interviews. I appreciate you today. JD Hatfield will definitely take a look at the markets and bring you back. We'll see what happens after the turkey holiday. I hope you have a great holiday and have a great week, Jay.
Thanks, Mitch, for having me on again. It was fun.
Care. All right, we'll see what's going on in the markets out there. And definitely Jay has a good perspective. I think that we need to keep watch how, of course, we see the next year coming in. But Siegel bullish. And you guys can see there, Jay seems like he's leaning that we could have a better 2023. The big thing is going to be how long does the Fed continue to hold us down and hold us back. But it seems to me like definitely the path to least resistance is starting to be more for the upside. The only downside, of course, is more concerns about recession. Will we get into kind of more of those concerns? We'll have to wait and see. A big part of that is going to be right now watching what happens in, of course, Black Friday holiday shopping. What's going to happen there, right? Is it going to be a good Black Friday or a bad one? It's an important outlook to keep watch because it's going to tell us a lot of, is Santa Claus coming to town or not, right? Is he or not? I mean, we need to keep watch to see what happens there. But let's get back towards the overall market, see what we're seeing in the action right now. Are we getting a little pop up there? Now we're starting to get a nice little pop through that 395, held the pullback right now. So let's see if we can make our move to 396 as we're starting to make our way back after a nice little pullback here in the morning. And we're starting to see some of the stocks lift. Look at Amazon starting to get on up there. Apple starting to catch a little bit of a bounce. Going to start looking for stocks that were strong this morning, come back into strength. Like, let's say maybe even a Disney really start getting strong here. Well, we'll have to wait and see. XOM oil had been strong. We'll see if this comes right back down. It's been that type of day, but let's get into those Black Friday type of stocks. Best Buy coming down today. Of course, they have earnings on Tuesday, so this could be a little bit of a takedown before their earnings. That's something to keep in mind. I don't know how you guys feel about Best Buy. It did get Target. Target got hit. It got hit on Target's earnings where it did kind of a 6% drop already. Did this lower the bar enough for Best Buy to come through? What do you guys feel in the chat? Put a 1 if you guys feel Best Buy will have a good earnings. Put a 2 if you guys feel that they will miss. Santa got COVID. Oh man, we don't want that one. Bad Santa. Oof, that one be even worse. It's a good movie though. I agree. We'll see what else is going on. Let's see. Best Buy is one of the stocks that, of course, is going to tell us about electronics. I think that's why I'm important. I think it's an important outlook, right? How are electronics going to do? Do people need the new TV this year? That's something to question, right? That's why we've been questioning those iPhone sales. And who knows, whatever happens to that. But there's also other stores that are definitely going to be reporting. Also, you got Dick's Sporting Goods. This one's not looking too bad. It's been going sideways for a while now, about a month. Now the question is, does it get knocked right back down? Dick's Sporting Good. I don't know about this one too much. You know, one of the things is that it's a tough environment right now to expect retailers to keep meeting their numbers. But of course, there's still some that are kind of what we would call recession proof, what we call kind of the lower cost budget plays, right? Like we've been talking about those like Ross. Ross Stores continuing in a move up today after a pullback. Things like this is what I kind of would be looking for. TJX last week reported good earnings, pulled back off of those earnings, filled the gap, now starting to make the move right back up. These are the type of stocks that I would be watching in the retail space. Now, when it comes to Dick's Sporting Goods, I'm just not certain about that. But, of course, we saw Nike get a little bit of a lift. Maybe Nike gets a little bit of a lift here. It's definitely hanging out sideways here. Can it get that next little push? We'll have to wait and see. Dollar Tree, though. Dollar Tree also reporting this week. Is this a nice little setup? This seems to me like a nice little setup for earnings. I don't play earnings often, but Dollar Tree pulling back today to the 160s, looking for a move up there towards the 170s. This doesn't look too bad. Of course, it will all depend on how their earnings come. DG is another one, right? Will this one get the move through 260? Been waiting to see that nice little push. It did pull back today. Now starting to push there towards the 258. We'll see if we can get up there and get a breakout there in DG. Dollar Tree. Will we get the lift? Of course, Target found the bounce eventually. One that I've been looking at since these kind of cheaper ones have been getting the lift is Ollie Bargain. And that's starting to get a little bit of a lift. We'll just have to wait and see if these can really take off, these cheaper type of names. All right, catching up with the chat. I did see a two. Oh, more twos there. Definitely. The Bears are out there. They don't think they're going to be able to beat on their earnings report. But what about Dollar Tree? Do you guys feel Dollar Tree will be able to beat? Put a 1 if you guys think Dollar Tree is going to beat. Put a 2 if you guys think Dollar Tree won't be able to beat there. Isn't there a Michael stock? We'll see what happens. But lump of coal. But Dad used it for heat. Yeah. Got to use that lump of coal for sure. All right, we can keep going into different stocks. Dick's Sporting Goods at the Westfield, Connecticut Post Mall. You guys like Dick's Sporting Good? What do you guys feel on that one? Looks like you guys are jumping in there for Dollar Tree. Miss Whitehorse says bullish on the Dollar Tree. MD says bullish on it. I have to wait and see. Of course, earnings are always a surprise, but can it get the lift? What I like about this stock is that it got the little pullback with the Target and Walmart mentions. That gave you a little opportunity to catch it at a discounted spot today, and now getting the lift into the earnings. Of course, they're coming on Tuesday, so watch out. There's a dollar store here in Canada that they've been killing it. Yeah, dollar stores are not going to be a bad alternative in a high inflationary environment, right? Well, another one that having a decent move today is Walgreens Boots Alliance. I actually got stopped out on this play. A little bit annoyed on how I attacked this one, but it's just how it goes sometimes, right? Well, this one did a nice little setup in the morning. I was in it right until this down move, got stopped out through the 39.75, and then this one takes off now towards the 40.50s. Not a bad area to keep watch. Look at the daily chart on this one. That's why I was attacking this one. The hourly chart looked so nice off of the risk to return there. Just didn't give myself enough window room to get that nice lift. Another stock that we were talking about that was having a good move here in health was CVS. Could this one continue to get a nice little lift? This one doesn't look too bad on the day. It's right around the VWAP now. We'll see if it takes that move towards 98.20s and closes towards the 98.40s would be really nice there for CVS. ELV is another one that I'd keep on watch. There's some healthcare plans that have been making a nice little move back here. Healthcare plans, looks like some of them are in the green, some of them in the red, so keep on watch. CVS still with that nice little setup. One that I was also watching, UNH, ATUM. Looks like they're hanging out right now, Humana and CVS. We'll see what happens to these stocks. All right, let's keep going. We'll see what else is going to happen. DWAC, I don't know about all that. We'll see what happens on DWAC, RUM, and those kind of stocks out there. But one thing that I did see is that on Friday, we talked about a stock that could potentially be in bankruptcy concerns or disaster stocks. And it looks like we're starting to get some more to start really jumping in on that boat. Looks like Carvana, Wall Street Journal throughout the weekend saying that the online used car retailer could run out of cash within a year. Of course, Carvana, we talked about how they were doing some more cuts. It's making another leg down here through the 770s down there towards $7 today, about 8%, a little bit over that on the day. Doesn't look good there for Carvana. We'll see if it eventually disappears. We've talked about that disaster stock. Doesn't look good right now. Now the China stocks finally turning back around after they gave a big lift. Take a look at Baba's turn right back down. You guys can also see this in JD, PDD. So keep watch on PDD. I think that's the strongest one of the three. And why? Honestly, I wouldn't be able to give you an answer. But one thing I can tell you is just look at the charts. It looks like PDD has been hanging in there, has a big resistance above it towards the 72. We'll see if it starts breaking back down there towards the 50. JD is another one, of course, to keep on watch, but this one kind of runs more with Baba. We'll see if these can turn back around. China stocks got hit hard today with that COVID mention. Of course, we want to keep our eyes on what's going on in the COVID situation in China. All right, catching up with the chat. What we'll do here is we're going to take a little bit of ticker time. I got about 10 minutes left here, so you guys can go ahead, throw up some stocks in the chat if you guys got tickers that you guys are taking a look at, especially after the bell earnings coming up. We'll keep watch on that. Now, one stock that I will put some warnings out there, it seems like Grayscale is one to keep in mind. Of course, GBTC, Bitcoin stocks continue to keep getting hit hard. And it looks like there's more concerns here for Grayscale. A lot of people are trying to get different Bitcoin names to really start showing their proof of reserves to customers to kind of take away some of the uncertainty. Now, they did state that they wrote out in a statement that due to security concerns, we do not make such on-chain wallet information and confirmation data publicly available through a cryptographic proof of reserve or any advanced cryptographic accounting procedure. So looks to here like Grayscale not being able to show their proof of reserves and getting hit harder on that, and could continue getting hit on that, would just show me that I would be a little bit concerned about names like MicroStrategy and other names that have big exposure to Bitcoin. I know some people are taking their shots in this, but I think that the risk is just too big. Like always, I'd rather be risk adverse than just to live on the wild side. All right, we'll see what else is going on out there. Let's go. We'll take some stocks from the chat right now. Looks like you guys are taking. Want to take a look at ZM? Let's take a look at that. All right, zoom. Choppy day. Sucks to trade today. Yes, SRT8. It was a tough one for me. I ended the day early, and I think that's one thing that you need to kind of take a look at. Sometimes we just having these tough markets, and it's better to maybe keep our money to the sidelines than put a bunch of it to work, or look for these afternoon trends that actually exist so that we can find a trend. When it's choppy markets, it's definitely tough. All right. Zoom. What's going on in Zoom there? Well, of course, this was one of those growth stocks that got a little bit of a push. Now I'm starting to call the end of this growth kind of rally. I think this comes right back down. Same way I feel about Unity. I feel like Unity is setting up for a move right back down after the growth stocks really kind of continued pushing. Take a look at the hourly chart, though. It does look like it's trying to hold on a little bit. If it cracks that hourly low, I'd say you got to go. Be careful there for the move through 3150. If you do get that move through 3150, you could be right back down to the 30s and the 25s. ARKK will show me that, right? Weakness in the charts after getting a pop. We'll see if this is able to hold on. Is growth able to hold on? We'll keep watch. MMAT being brought up here. Meta Materials, cheaper stock, has continued the lift. Tried to continue pushing here. I'll take a look at the support around 195. See if that's being able to hold up right now. The hourly chart actually cracked towards the 190. So it looks like that's being able to hold as support right now. It doesn't look too bad. You're getting the little spikes up. It's trying to hold the VWAP. That's what I would be looking on the 15-minute. You can see it right now, just trying to hold that VWAP. If it breaks that, probably test $2. So just be careful on a name like this. There's not much on the upside, not much on the downside. So in names like this, I think you got to be quick to the gun. But, of course, this is Meta Materials, and you're looking at kind of more of like a meta name. You got a lot of daily resistance that is trying to hold on pullbacks. Doesn't look too bad, but how much more can it get there? That's what I'd be paying attention to. Can it get to the 250s? Maybe that's kind of like the top outlook there. I wouldn't be too bad about 250s, but anything above that seems like a little bit of a reach. We'll see what happens. All right, a lot of stocks coming through now. I'm going to quickly run through these. If you guys threw up a stock in the chat, do me the favor, hit that like button as we keep going. CrowdStrike, going to be looking for this to kind of show reversal signs. Right now is not the time. I thought it could get the lift because of Pan W with a good report, and Pan W sticking around. So don't lose eyes on this one. But definitely CrowdStrike still not turning around the names right now in cybersecurity. So we'll have to wait and see. Can the leader take lead? Lockheed Martin pulled back there, now making its way back towards 482. Didn't get into the 450 handle like I wanted. I was drawing a little bit of a retracement tool there, looking for the kind of push back towards the 450. It's already back up there towards 483 as it's trying to make its way towards 500. All right, catching up with some other ones here. Microsoft being mentioned by Kevin. I got you. Let's keep going. Feedback on SoFi coming up next, Trader Head. Let's keep going. Microsoft trying to make its way back. Doesn't look too bad here as we're finally starting to hold sideways on the weekly. The big thing I think now you need to just keep watch is the resistance above. If it can get above that, then we're not going to be looking too bad here. And that's levels right here weekly, 251.04, 250.58. So needs to hold the 250 mark to really get back into at least bullish tone on the weeklies. Daily, big resistance on that. So right now I see kind of a trend line. Can we actually break above this trend line and hold towards 246? Or are we going to break it right back down through the low here, through the daily gap coming right through 235, going to 227. Keep your eyes on Microsoft. We'll have to wait and see. U.S. plays at 2 p.m. Yes, you got it easy. I'll be watching that game. That starts at 2 p.m. We'll be getting out of here in just a few minutes. So, yes, USA, USA, USA. Let's go. Pulsic is on my So Rare team. If you guys don't know So Rare, check it out. I can give you guys the link if you guys want to go ahead and check out a little bit of some fantasy with the World Cup action. That's coming from So Rare. But let's keep going. Let's take a look at some other stocks that you guys are calling out there. All right, SoFi was the one that I said I would talk about next. So let's get towards that one. This is one that I would say, hey, sometimes you got to take your peanuts while the circus is in town, because if not, very easily could crack right back below the $5. And there you have it, right back down below. And I remember on SoFi when even my man Spencer was still here, and it was starting to crack 14. And when it started to crack 14, I was already underwater in a name like similar to SoFi. And I told Spencer and a lot of people, I said, you got to be careful on names like this, because it easily just becomes a slowly down. And I didn't want anyone suffering the same kind of outlook that I did. And now I see it. SoFi down 62% from around that area. And we're not even talking from the high, right? We're talking just from around that 14 area. And that was somewhere around in the beginning of the year, as I was starting to see some stocks just leak out, some SPACs leak out. And does SoFi mean it's going to completely disappear? No, but it does mean that it could go even cheaper. It could go to 3. It could go to 2. It could go to 1 and then finally turn around. But then, of course, what happens when a stock goes down that far? Well, the stock has to make pretty much 10 times the percentage return to probably get back to just where it was. So then you're fighting the headwinds the whole time. It looks to me like SoFi is in that realm where it's just going to be fighting the up moves every time you get that back move towards the upside. And then, so you guys can see here, I would just keep watch to see if it can kind of bounce now. Lows around 475. If that breaks, you could just keep coming down. Right now, another way to look at it is, when will it become oversold again? So what I'll do for you guys is just draw on the RSI what has been extreme moments for me on SoFi RSI. And it looks to me like anywhere below the 18 on the RSI is when we've been getting these bounces. And you guys can see here, stock gets low, it bounces. Stock gets low, it bounces. Stock gets low, it bounces. It bounces. So let's see that happen. Let's let that RSI get down below 20s, and it even needs to get below probably towards the 18, if anything below that. And then I'd be maybe looking for a little bit of a bounce. But right now, it looks like you got to go when you're making new lows. Be careful there, SoFi. Mitch, too much CPI study. No, it's not CPI study. It's CMT study. And there's nothing wrong with that outlook there. I'll tell you right now, it's impressive how RSI really calls these bounce. Yes, it's not a leading indicator, but it really does work a lot of the times. Take a look at the SPY, right? If you look at the SPY, when have we gotten the turnarounds, right? Well, look here. Turn around here from the bottoming on the RSI. Then we got the bounce, that big bounce. When did we turn around? When we got to the extreme on the RSI. When did we come down? When did we find some bounce? When we got to the extreme. When did we got to the extreme? You guys see there, right? And so right now, I don't think there's really much edge. We're kind of more in the middle range. And so I look at these way too often to kind of keep my eyes on what is oversold, what is overbought, and when we could find those bounces, and especially big trend kind of bounces. They have a tendency to work. All right, let's take a look there. You want to look at ROG? I got you, Hertz. Look at RSI on ROG to take a look at when this one could bounce. Okay, now one thing though to keep in mind about ROG is that it has bad news, right? Bad news can sometimes change the tape. And so you got to ask yourself, is this a catalyst type of move? Of course, That's going to hurt you on an ROG when you have a horrible catalyst like it's going through. But let's take a look at the RSI just based on that case, right? And on that case alone, what we could look at is, where is it extreme? It seems like it's extreme below 9. And so you are below those levels. So you could see a bounce eventually in ROG at these levels. But the question is, how far down does the RSI hold it down here? And when do you get that reversal style bounce? So another thing that I would keep in mind is that when you see the RSI go from like 50 to like 9 on one move, a big down gap, it's a little bit harder. You lose a little bit of the edge there for ROG. All right, let's see what else is being brought up there. I like extremes. Check out Gilead. Perfect example on Gilead, right? Gilead is one of those that is really nice. And this one was at an extreme on those lows and found the bounce, right? And so I think this is the important thing to kind of take a look at. And I'm not saying that, RSI is, the holy grail or anything. But of course, if you guys can keep watch when you are getting those peaks down below anything that is extreme on the name, that's usually when we get a little bit of that trend reversal. So it's up to what you like there. ADX is better for commodities, said Quantum. I do agree, right? And our RSI is more of a battle here of overbought and oversold. And ADX is more momentum. I would say ADX is better for telling trend than even RSI. But what I like about RSI is that it helps me with these extreme historical outlooks. But yes, ADX is another really good one to use, and are both scholastics. Agreed, Quantum. An important thing to keep in mind, right? So definitely ADX, RSI. I actually been looking at doing a kind of more of a complex outlook strategy for RSI with ADX. So stay tuned, Quantum. I'll let you in on that. All right, let's keep going. We'll take a look at some other stocks. We're about to wrap up here. Definitely going to get over to, of course, U.S. Qatar, first Cup host team to lose the opener to Ecuador. Yeah, that was a tough loss there. But Ecuador is a little bit of a decent team. They're not like it's bad. Let's keep going. We'll take a look. M&T Bank. What is that one? Is it MTC? NTB. I got you. All right, let's take a look there. All right, so this is around 170. Let's go to the weekly on this one. Banks look like this one's holding the weekly pullback consistently. And so you can see here from this kind of dip, you keep holding that little pullback. That's looking good there for me. I would look for that to kind of keep hold. And now you're trying to get back here towards the resistance where you battled. You got through for a second, and then you really struggled there around the 190s. So let's see if we can even get back there towards the 178, the 180s. And then really you're starting to see the support is underneath it. If that goes, you got to go 160 would be the level that I'd be concerned if it cracks that and comes to the downside. But right now on the dailies, you can see here how you keep battling and you can't get through that 172. When I can't get through a level, a lot of the times I'm looking for it to get through 1, 2, 3 on that fourth attempt, and you should get through. You can't get through. A lot of times you're going to go right back down towards the support. Looks like we're testing down. We got to be careful here on a name like this. It could break down. I feel like this one's struggling to hold on. Need to get back through 172. Was that the doorbell? No, it wasn't the doorbell, but you know how it is. The phone rang. I'll just keep moving here. ABBV was doing that too. I'll take a look at that one. That one's not a bad one there. ABBV. Yeah, extremes. Extremes are so important, guys. And so we're always looking for those moments, right? So look how this 18 shows up, right? I'm not even looking at this year's price action. I'm looking at prior price action. Where has it been extreme? You could see the spike down there. You can see the spike down there. So let's draw it through that line. Look at these moments this year that you could have been buying AbbVie on those spike downs. And what happens here? On that day, yeah, you got hit hard, but you come back on the daily about 8-9%. On this day, yeah, maybe you got in on this day, right? And you got in on this day and you took a little bit of some downside pressure, but then you got another 14% gain, right? Over here, another 2% gain. Right here, another kind of 6% gain, right? And then now you're seeing that nice lift. If you never sold from down here, you're getting a big breakout there on AbbVie. This is how you can take some approach in the RSI, and we'll see what happens there. M&T Bank used to be the People's United Bank. Thank you, Kenneth. I don't know too much about banks that often. I don't look too much into them. I just usually stay with some of the bigger banks, but they're not looking too bad lately. One that I was watching because Warren has some exposure is Ally Financial. We'll see what happens on that. NUE, really good stock on the day. Steel stock, we talked about that one. Let's take a look also. Extreme RSI. What's the extreme RSI? Taking a little learning lesson today on our extreme, right? Where was the extreme? Right down towards the low. Right around 11s. Anything below 11s looks like it's extreme here. We get a reading here around 12. Yes, you get some downward action, but you still get that up move. That's what I would be looking for in a lot of these. Now NUE starting to make that nice lift. We'll see if it closes towards the 150. And the one that's lagging here is Cleveland Cliff. This would be one, if I continue to see steel make a nice lift, I'll look for Cleveland Cliff to kind of catch that kind of momentum play towards the upside. Steel Dynamics. We'll see if this can continue making the lifts through that 100. All right, that's going to do it for me. I'm going to wrap up USA. USA is coming up. And then, of course, later today, we will have none other than At the Close. So please hit the like if you guys enjoyed today's show as we went through stocks from you guys. Took a little bit of an extended ticker time for you guys, even up to I think we almost did 20 minutes in ticker time today. So do me the favor, hit the thumbs up, and this will send you over to At the Close, which won't start up till 3:30. So if you want to watch a little bit of the USA play, can't blame me for that. I'm going to do so myself, take a little lunch, be back here 3:30 to talk about the closing of the markets with none other than Joel Elconin. So don't miss it. We'll see what happened in the markets today. Hit the thumbs up on your way out, and we got it going right here on Benzinga. You don't got to go anywhere to find out about stocks because we got it all from live trading, morning commentary, and of course, don't miss out on all the crypto action. We cover it all here on Benzinga. So we'll see you guys in a little bit. Hit the thumbs up. At the Close coming up. That's at 3:30. Go USA. Let's see what they can do today.